Good morning, it's Harvey Jackson. Just going to go through the top news item. Yesterday, Trump and President Xi from China met and somewhat struck a deal for a few things, but we'll get into it a little bit. But it's definitely disappointed the market, especially on soybeans and well, I'm going to say overall market sentiment as well. You can see here, China pledged to expand farm trade. Pledged, yeah, that doesn't sound too strong there, but yeah, okay. Yeah, like with 3 cargoes that they bought yesterday, or got proved that they bought yesterday, maybe that's their pledge. Uh, the Chinese Commerce Ministry said it would expand agricultural trade. Okay, more than the 3 cargoes, I guess. Implement, Implementation details matter a lot. This was stated by one of the Beijing people. The U.S. agriculture products, or they will create bureaucratic process exempting them from a case-by-case basis, so they don't know how they're going to just allow the product way in. It might be faced by, or on an individual basis every time. Since the trade war first since the first administration, Trump, China has diversified its sources of soybean imports, and that's well known. We talked about that quite a few times. And in 24, China bought roughly 20% of its beans from the United States, down from 41% in 2016. And we can always pick the good dates and the bad dates, but right now it's looking like 0%, so that's not good either. Just another one. The main thing that was hitting the headlines, that they decreased the tariff rate from, I think it was 47 or 57 down to 47, and it's going to based on the fentanyl trade starting to slow down. And it actually had an agreement with rare earths as well. And what that meant, it just looks like it's getting extended. The Chinese export to U.S. is actually just going to be extended 1 year, nothing longer than that. And they're going to buy some energy as well, which it would be good. And it's coming from I think from Alaska ports. Well, geez, that's not far from BC, where we want to put uh, would like to put a pipeline from the west going out there, but we've got some restrictions there with BC and then our federal government. Here's an excerpt about the peas here.
Member for Foothill. We have just learned that India has placed 30% tariff on Canadian peas. This is on top of the 100% tariffs already in place from China. As a result, 80% of Canada's pea markets now face tariffs worldwide. This is putting Canadian farmers at risk as prices have dropped more than 40%. The Prime Minister and his team was just in India, and now they're in China. Every time they go somewhere, it gets worse.
That's right.
What is this government going to do to ensure that our farmers get the tariff relief they need to ensure that they can stay in business?
Right.
The Honourable Parliamentary Secretary.
Mr. Speaker, our government and our Prime Minister have been working hard to ensure that Canadian farmers have access to markets around the world. Part of the work that they've been doing is exactly that, cutting deals with more and more countries to ensure that Canadian farmers can sell their products to more and more markets around the world. And that is exactly what we've been doing from Singapore to Malaysia.
Yeah, so things get worse when they travel. We just get bigger and bigger tariffs. So just a couple last things here. The U.S. cut their rates and doesn't look like or sound like they're going to have any more rate cuts this year. That's kind of disappointed the market as well. Canada has decreased its interest rates too for the second time. Now we're sitting at 2.25. Just a quick look at the weather here. It looks like there is going to be a build of high pressure over the U.S. For this next week, and maybe which would help the harvest progress a little bit as well. Just a quick look at the rain here. So those trick-or-treaters over there are going to maybe get a little bit of rain on them, and then as it builds for the next week, it keeps on building to the farther north. Temperatures, though, it's near 1 degrees on the 31st as well, so it's going to be pretty cold and colder. Just a bit of a look all the way out to all of November, December, and it's basically saying warmer in the west and colder in the east here, splitting right Manitoba versus Saskatchewan almost there with that map anyway. So a quick look at the market. Canola is down $3.50 to $4. Rapeseed is up slightly on the front months, but we are rolling from November here into forward months here. Just about everything is priced already off of January contracts anyway now for canola, and then rapeseed is I think it's February, and then soybean oil down as well. It broke its traded below the 200-day moving average. Palm oil is slightly up. Crude oil is still down, right at $60 a barrel. Soybeans down 18.5 cents. Soy meal is down just $1.30, and your wheats are all down. Spring wheat is down 5 cents, and your your Chicago and your Kansas wheat are down 9 to 10. Here's your canola, basically trading sideways, chopping sideways, respecting the 100-day moving average, and trading sideways, really. And then you look at the November of 26, still like that area of pricing. We keep on making lower highs, still problematic for sure. Nice leg up that we saw the last few days on European rapeseed, and again, this contract is rolling out, so it might not be a true picture. We'll be looking at the next month. Your price differential between European rapeseed and canola is $137 Canadian. Soybean oil futures, I just got a few zoomed in views. This is the 200-day moving average, the blue line, and it closed below it. And the support line, the pivot trend line. So there's some potential downside move here. Soybean futures, it broke pretty hard with the news overnight. Same thing. Crude palm oil has been on its downward slide here as well, but it's trying to trade right back at that 200-day moving average. Crude oil basically going sideways at the moment. Canadian dollar pulled off a little wee bit with its decrease of interest rates. Now, what direction is it going to go here? Because both Fed, the U.S. and Canada both cut rates at the same pace here, so it might not be doing anything. And the bonds are dropping. Let's have a look at the wheat. It pulled back, zoomed in here. Same thing with the Kansas, Chicago, all pulling back, and the same thing with the MATIF there as well. Corn, red day there as well. Basically trading below that 200-day moving average. That was the ceiling, trading at that 432, which is basically your resistance. If you got above that and traded, it would maybe have a little bit of upside, but it looks like we've stalled now with the trade talks with China, and that's maybe stopped everything here. Live cattle, a little bit of a recovery. We'll see if that continues. Same thing with the feeder cattle, and it's not showing up in the pork as of yet either, that recovery. That's all I have here.